You're watching Wall Street Confidential. We knew you'd be watching this video. It's Jim Cramer's take on really probably one of the worst financial days of the year. It's going to go down in the history books. I mean, the banking sector is shrinking, Jim. You know, we've got now left Goldman Sachs and Merrill and Morgan Stanley.
Right.
What do you make of all this?
Well, I think that we've had three different markets simultaneously. We've had the commodity markets, and those have crashed, and that's because of China. We've had the financial markets, and those are bifurcated. The weak hands continue to go down. The strong hands continue to go up or stabilize. And then we have another whole market that is dependent upon commodities going down. So you literally have you have probably 50% of the market that's bad and 50% that is good. There's a perception on the site of Real Money that I really want to caution people about, which is that if you're going to view this market as a stock market, you are going to be in all the wrong stocks and be out of all the wrong stocks. And what happened at Lehman was very Lehman specific. Dick Folders just did a very bad job. What happened with John Thain was that he recognized that no matter how much they sold, they were going to, of their bad mortgage portfolio, he was handed just a horrible mortgage portfolio, and he had to sell or else they would take his stock down, and he wanted to do what was right for his shareholders. Ken Lewis is a better manager. Bank of America is a better manager. They knew their customers better. Lehman, Merrill, and Bear were the worst mortgage issuers of this era, other than Countrywide, which seems to have already been digested by Bank of America, and the Nova Stars and Fremont Generals. You have to go back to the fact that those three had bad underwriting standards to explain what's happening right now.
Now, you know, when you think about this, you think about Morgan Stanley and Goldman Sachs, the two remaining independent investment banks.
They were not, well, Morgan last, but they were not mortgage issuers. That's why they didn't get hung.
Can they kind of resurrect this industry for everyone here?
I think definitely. I just bought some Goldman Sachs and some Morgan Stanley for action alerts. And it's very simple. This is a business that had been compromised by too much competition. In classic style, it's now consolidating, whether it be the steel industry that did that or the food industry that did that in the 80s or the paper industry at one time, which consolidated. Now margins will go higher. Now, no one wants to hear that, and Goldman's quarter will be miserable, and Morgan's quarter will be miserable. But, you know, you got to think back and recognize that this was a business where there was very little money being made, and now because there's so little competition, particularly from Lehman and from Bear, but now from Merrill, there will be bountiful margins, and the winners are really just three companies. It's really just the majors. Well, you could say Credit Suisse maybe, but it's Goldman, and it's Morgan, and it's J.P. Morgan. And how you cannot buy those, even with the idea that they could still be down another 10 to 15%, is mystifying to me. Wells Fargo's a huge winner on the banking side.
All right, Jim, we're going to take a walk down memory lane. We're going to go back through history, talk about lessons learned there, and how this all came about.
Sure.
Thanks very much. This is Wall Street Confidential. Stay tuned.